Welcome, everyone. Good morning. For some of you, it's actually good evening, good afternoon. Welcome to the session hosted by GIZ, the German Development Agency, IRC, SWA, the Sanitation and Water for All Partnership, AFD, the French Development Agency, and the World Bank. My name is Caterina Fonseca. I'm an economist in the sector. I'm an IRC associate, and I'll be also your moderator for this session. While we are waiting, and I have to do some announcements, you can add in the chat box where you're from, where are you calling in from, where are you listening to this special, very different Water Week. So the announcements, if you have joined this session, it means that you are automatically agreeing with the recording of the session, and it will be also made publicly available afterwards. Don't forget to keep yourself muted and with no video. That is only for the panel and the speakers of the session. Today we're going to have a very interesting conversation, I hope. There's a chat box also where you can start putting questions that you have either for the speakers and the panel. And in addition to the speakers, which I will introduce as the session comes along, we also have Catherine Gronemeyer. She is the head of the policy unit of GIZ, and she will be helping me throughout the session to then bring some of the groups of questions to the panel discussion. The speakers I saw, they're also sharing their contacts with their presentations. So if you have very specific questions on their presentations, please write them directly. So why this session? Whodunnit? Tracking down and learning from smooth financial and technical cooperation cases. I think this whole day, probably one of the sentences that you will hear at the start of each session is that we have a large finance gap in the sector. And I think it's important to clarify for this session that when we talk about finance gap, we're not just talking about the money needed for the construction and maintenance of infrastructure, also in jargon CAPEX, capital expenditure, but we're also talking about the money needed for making the institutions, the individuals working in the sector to work effectively, the service providers, the regulators, the policymakers, because only when they are actually fulfilling some of their mandates of finance in the sector will the sector be able to attract more finance. And we just had a really interesting session previously. The Rebel Group made a study, and I really encourage you to look at it afterwards. And depressingly, last week, I just read a DevEx article that said that in the final response to COVID, the water sector had been one of the sectors most left behind, which I immediately think, well, if the service providers were already with so many financial problems and challenges, this certainly will not improve the situation. And on top of it, both the offer and the demand of finance are scattered. You have different financial instruments, different bilateral development agencies. We have the banks, the national government priorities, and these interests of demand and offer of finance don't always align. I should keep passing my slides. So, but on the positive side, we have several success cases on how actually this financial wizardry and institutional wizardry works for the sector, and we will be showing in this session a success story on water from the Philippines and a success story on sanitation from Morocco. A lot of these stories and case studies are also in the Finance Minister's Handbook that Angie will introduce. So let's hear from them. Let's hear from all our speakers and panelists who done it, why and how. And I will now introduce our first speaker, Angie Saleh, from the Sanitation and Water for All. So Angie is the head of governance and partnerships in the Sanitation and Water for All Secretariats. She's responsible for coordinating and supporting the SWA high-level political dialogue and the engagement at global level. She holds a Master's of Public Policy from University College London, England, and a Bachelor of Science in Political Science from Cairo University, Egypt. Angie, the floor is yours.
Thank you, Katarina. Good morning, everyone. Good afternoon for those of you on the other side of the world. And I'm happy to be here with you to talk to you about the ministerial handbook for on how to make public investments work in the water and sanitation sector. Katarina, I can't seem to be able to move the slides. Yes, thank you. So what is the handbook? The handbook is a call to action for ministers of finance with inspirational case studies and forward-looking sector perspectives. This is part of an initiative by SWA to provide curated knowledge, particularly directed at ministers. The handbook, or this chapter of the handbook, as we call it, is only a first chapter of a bigger project that will give focus and this kind of curated knowledge to ministers. However, the first topic that we chose for the first chapter was finance. And if we go to the next slide, please. We asked the question, why finance? Why do we focus on finance? And what that brings us to our target. What is our target as a sector? Our target is to achieve universal access by 2030. And we see that if we want to reach universal basic services, we require 2 times the historic rate of progress that we've been moving with currently and in the past 20 years. If we go to the next slide, please. If we want to reach universal safely managed services, which is one step higher in the ladder, we need 4 times the historic rate of progress that we've been achieving in the past 20 years. So what's missing? Can we move? Yeah, what's missing? We say that we need at least 3 times the past investment amounts, and that's not the whole picture. So if we find that the estimated capital to achieve universal access to water and sanitation is about $114 billion per year, and this does not even include operating and maintenance costs. If we go to the however, and this, however, is very important, and this is what the handbook is also trying to focus on and bring attention to. The lack of money alone is not the root cause of the water and sanitation sector problems. Political decisions and policies made at ministries of finance can have a considerable effect and impact on the sector, as we all know, and the examples in the handbook will demonstrate this when you read the handbook. So breaking out of this cycle requires political leadership, and political leadership is key to inspire change and put new plans into action. As we say in general, if there's a will, there is a way. Of course, political leadership and financing do not exist in vacuum. We need to ensure that the other foundations are in place as well. This includes governance, institutions, incentives, capacity. All of this is needed to move forwards towards creditworthiness and the ability to access finance in the sector. So if we look at our target audience, which is finance ministers, we have to ask, why finance ministers? And as we can see from the slide in front of you, we are saying that no one works in vacuum and no one works alone in the sector. And of course, as if you're familiar with SWA and the SWA framework, you will know that sector coordination and collaborative behaviors are a key component of our framework and something that we really value and hope that the whole sector value at the same level. Finance ministers are perhaps outside of our sector, theoretically speaking, but they are important actors that we need to interact with and work with. They can operate within the existing political constraints to boost the level and effectiveness of financing, of course, in close cooperation with their counterparts who are our sector ministers. Finance ministers are also critical to the sector because they hold important coordination functions. They are horizontally coordinating with other line ministries, health, rural or urban development, education, environment. All of these sectors are linked to us through the ministers of finance and through ministries of finance. And vertically, they also hold the coordination functions with local government units, and depending on the level of decentralization in every country. However, all local government units and utilities are important for service provision to the users. The responsibility to adopt solutions can deliver universal access. For instance, services and are in the hands of political leaders. And the handbook provides a framework for thinking about actions that can be taken to address those challenges that are deep-seated in our sector and tell us how we can mobilize leadership to service us and to help us unblock those challenges. The handbook highlights many country examples based on the four blocks that you see on this slide. So the main blocks that we are trying to mobilize political leadership, and namely ministers of finance, to support policies on are maximizing the value from existing public funding. This can be done by incentivizing sector performance, improving subsidy targeting, and promoting better sector planning and management. The second thing is mobilizing more funding, so not just the existing public funding, but how to mobilize more funding by setting up adequate cost recovery policies, reforming tariff systems, introducing earmarked taxes that can go specifically to the sector, establishing an array of options for cross-subsidization between sectors in order to pour into the water and sanitation sector. The third block of policies that we're also trying to mobilize ministers of finance to work with us on is to increase repayable domestic finance. This can be done through mechanisms that reduce perceived risks and that pool financing at national, municipal, and household levels. The fourth and final block that the handbook works on is to encourage innovation and least explored new approaches, such as climate funds, how to block the climate financing and access it to the benefit of the sector, social impact bonds, to tap sources of finance that are rarely accessed by the water and sanitation sector. If you go to the next slide, please, Katarina. So the handbook has so many examples on each of those four blocks, and we believe that all countries can raise varying degrees of money by maximizing value from existing public funding and mobilizing any additional funds. However, the ability of low and middle income countries to mobilize additional repayable financing and explore financial innovations is highly dependent on the ability of the sector to demonstrate that it receives and makes good use of those existing funds. So this is why we are inviting you all to join us next week on September 2nd in the event that's going to be hosted by SWA to launch this handbook and to read more into the case studies, one of which is going to be presented today in this session. Thank you all so much. And if you have any additional questions, or if you want to request any information, please email us or check out our website as on the screen. Thank you.
Thank you, Angie. We go straight to our second speaker, Eileen Castro. So she's a financial specialist at the World Bank, and she has over 15 years in the water supply and sanitation sector, but also specifically in the banking and the finance sector. She leads analytical work on regulatory reforms, crowding commercial finance, and capacity building of water utilities and national government and agencies. But the main reason Mrs. Castro is here is because before she worked for the World Bank, she was actually the assistant vice president of the local government unit Guarantee Corporation in the Philippines. And in this role, back in early 2000, she structured the first ever finance plan for a water district, which was successfully scaled up in the Philippines. Meaning she's actually one of those rare financial wizards we have in the sector. And I see there's a comment that there was an important missing piece on the slide on the performance of the service providers. And actually, her case will also touch about it, how the improving the performance of the service providers then leads to generating more finance. So Eileen, how have you done it?
So what does it take for the water service providers to access commercial finance? Good morning from Washington, D.C. Today, I will try to answer that question in the context of the Philippines, particularly the Philippine Water Revolving Fund. This is one of the 9 successful blended finance cases documented by the World Bank under the Global Water Security and Sanitation Partnership. It's also one of the featured cases on the handbook that Angie mentioned earlier. Next slide, please. Why was it successful? In 2008, this facility helped water utilities mobilize commercial finance from local banks. In fact, it was the very first time that the private commercial banks opened their doors to water districts. These are state-owned enterprises perceived to be high risk, and they operate outside Metro Manila. Through this blended finance, a total of $234 million were generated, of which 60% came from the private sector. Next slide, please. This PWRF facilitated blended finance coming from Japan Bank for International Cooperation, now JICA, through the Development Bank of the Philippines, a government bank, blended with private financial institution loans, which benefited from partial credit guarantee from LGU Guarantee Corporation, my former employer. And that one has a co-guarantee arrangement with U.S. Agency for International Development. So this facility made the tenors longer from 7 years to 20 years, and also the blended rate effectively lowered the market interest rate. Those are the 2 shortcomings that we didn't have back then, and which were addressed by the revolving fund. Next slide, please. I'd like to spend more time in sharing with you how it happened. So first, we had champions at high level. In 2004, the President of the Philippines signed an executive order on financing reform. It's also around this time, 2002, when Japan and US governments signed the Clean Water Initiative. So suddenly, the WASH sector is now a priority in the Philippines among these 3 governments. Second is we address the foundational issues. We call this at the World Bank as mandatory. You should address the foundational issues before plugging in finance. What are these? So let me share with you the policy, institution, and regulatory framework. In the Philippines, we made sure that the policies and regulations are in place so that institutions are incentivized to perform their mandates. Specifically for policies, we have categorized service providers: creditworthy, semi-creditworthy, pre-creditworthy, and non-creditworthy. So creditworthy and semi-creditworthy, they are already encouraged to access commercial terms, but the pre-creditworthy and non-creditworthy could still avail of public financing and grants. In terms of institutions, we did not create new ones. In fact, we rely on what's already in the market. For example, JICA has a long-standing relationship with the Development Bank of the Philippines, which is a government bank that has already the expertise in lending to water districts. So they just included in a big environmental project loan agreement a subsector on WASH. And then on the private sector side, there are also active commercial banks which are already working with a local guarantor, that's LG Guarantee Corporation. So USAID and LGGC decided also to expand their existing agreement to include the WASH sector and particularly the water districts as eligible borrowers. For regulation, it was very helpful that the government entities like state-owned enterprises, these water districts, are able to open depository accounts with private banks. So there was relationship building that was facilitated out of this. The second framework that I'd like to discuss is the utility turnaround. We wanted to make sure that the projects funded under this fund are addressing non-revenue water, collection efficiency, and all of this would help them expand their network, so allowing more people to have access to water and sanitation. And because we have addressed these two foundational issues, we're now ready to launch this blended finance where we have three elements. We have the sovereign guarantee from the Republic of the Philippines to JICA. We have a partial risk guarantee from the LGGC to the private banks, which is further backed up by USAID DCA guarantee, so making it stronger. And lastly, there was a standby credit line, which takes care of the liquidity cover for the private sector, allowing them to extend their tenor from 7 years up to 20 years. The third element I'd like to highlight, which is equally important, is the coordination between the Republic of the Philippines and the donors. In this particular example, we have USAID and JICA coming in at the right time when the government wanted the reform. So first, the government must want this reform, and then the donors are there to support. So JICA took care of the public sector. Under the concessional loan agreement, it can only be on lent if it's co-financed with the private sector, minimum of 25% up to 50%. In the case of USAID, they did not only provide the partial risk guarantee, they also help through technical assistance. I remember we developed a credit rating system for water districts, which added to the confidence of the private sector in evaluating the risks of these proponents. There was also a manual that we developed for project appraisal, and we did a nationwide roadshow on how to evaluate this. We taught the bankers how to evaluate water districts. And lastly, on the side of the utilities, we made them ready. They prepared their own business plans. We also provided pool of consultants that will help develop project feasibility studies. We needed viable propositions to present to the banks, and that was made possible through this facility. So all in all, this facility managed to bring in 21 water and sanitation projects in the market with 0 default rate. I'd like to highlight that. We were able to underscore that water service providers are indeed credit-worthy. More importantly, 6 million people benefited out of this revolving fund. At present, the JICA loan is already closed, so we don't have this revolving fund, but somehow it has already met its objective. The private banks started lending on their own without the enhancements. So this is credited to the confidence building and the impetus of using this blended finance. Next slide, please. If you'd like to know more, please access the World Bank website. We have their curated knowledge on finance, including these 9 successful blended finance cases that were made possible by GWSP, the Global Water Security and Sanitation Partnership. So in here, we curate global knowledge and we try to share to our clients to help them in their decision making. Thank you.
Thank you, Eileen. So Eileen presented a very interesting coordination story that led to very high impact, both financial and a number of people served in the Philippines on water back in the start of 2000. And now we move to our second case, which is about sanitation. And our third and last speaker, Ahsan Belganani. He's a water engineer and holds a master's degree in economy and a bachelor degree in public law. So after 15 years in different public institutions in charge of irrigation and water, Mr. Whodunnit joined the European Union delegation in Morocco in 2008. In 2015, he moved to UNESCO multi-country offices for Morocco, Algeria, Mauritania, and Tunisia. And finally, in 2018, he joined the French Development Agency. But again, he's here in his professional capacity. Mr. Whodunnit is not a financial wizard like Eileen, but he has co-led for the past 15 years, the water thematic group in the country, which is a platform for consultation, harmonization, and sector dialogue between both financial and technical partners, but also with the national institutions working in the water sector in Morocco. Hassan, how have you done it? The floor is yours.
Thank you, Kazania. Good morning, everybody from Rabat, Morocco. I wanted to share with the participants the experience, the good experience in Morocco on the National Sanitation Program, because it is an interesting program who was launched in 2006. Maybe you can move to the next slide, Katarina, please. So the idea is to share with you the example of National Sanitation Program, how donors coordinated their support to this program, and how we succeed to have this coordination. Some information on the National Sanitation Program. National Sanitation Program is a governmental program launched in 2006. It aims by 2020 to collect 80% of urban wastewater and the treatment of 60% of collected wastewater. After that, the ambition was higher, and the objective became in 2030 to collect, treat, and reuse all urban wastewater. The cost of the national program sanitation has been estimated at 4 billion euros by 2020 in the beginning when the program was launched, and when the ambition became higher, the budget is estimated at the double. At the financial level, the idea is that 50% is financed by the beneficiaries, municipalities, through subsidies of the Ministry of Interior, and 50% are financed by operators, utilities, like in Morocco we have national utility called ONE, and we have utilities in some big cities. Next slide, please. Since we had this program, we several co-financing and parallel financing by many donors. You can see French Agency for Development, KfW, European Investment Bank, European Union, African Development Bank, the World Bank, JICA, Islamic Development Bank, ENABEL from Belgium, and the GIZ. So all these donors try to support this program either by co-financing or parallel financing of this program. I wanted to share specifically an example of co-financing between the European donors, French Development Agency, KfW, European Union, and European Investment Bank, with a contribution of 205 million euros, with lead of AFD. What is interesting in this co-financing is that it's really technical, financial approach. It's not only financial support of the program. This program is also we have the same manual of procedures for all the donors, and we support the projects, the infrastructures, but also we support technical assistance and some specific studies to have innovation in this program. Before this program, we had parallel financing with African Development Bank, World Bank, JICA, and others, the donors. But really, this is the co-financing, which is very mature and high level of co-financing with really one lead of donor. What makes it possible? I think this is the question of this. Is really in Morocco, we have a strong involvement and coordination of the Ministry of Finance. I think this joined the idea presented by Angie in Egypt, and also the National Sanitation Program. The objectives and the way to implement this program are very clear. The Moroccan government has a very clear vision on the financial mechanism and also the institutional who will implement the projects of this national sanitation program. When we have this situation, it is easy for the donors to have a good dialogue with the stakeholders at the Moroccan level, and also to coordinate their support. But we also have very interesting group of donors. We call it Group Thematic Water Working Group of Donors in Morocco. And this water working group, I will present it later, is very important to coordinate and to have good dialogue between donors and with national institutions. And also the last point is that the four donors, I mean IFD, AWB, European Union, and European Investment Bank, have a mutual reliance initiative, which means that we can rely on use the procedures of one donor. It is something very important because we can, with our partners, our partners have only one lead to discuss with them and with joint manual of procedures. I think that this is why we succeeded to have a good coordination to support this national sanitation program. Let me maybe share with you our story on this water working group of donors. It started with this decision in 2001 of the European Council, which established the guidelines for strengthening of operational coordination between the community represented by the Commission and the member states in the field of external aid. After that, after this, let's say, political decision, the European Commission made a decision and elaborated guidelines for concrete on-site coordination arrangements. After that, in Morocco, head of cooperation of member states and the Commission decided in 2002 to carry out this coordination in the water sector and three other sectors considered as priorities to be supported by member states and the Commission. So in the beginning, the idea was to have a coordination between European member states and the Commission. And after that, this working group gradually became more important, and all donors involved in water sector joined this group. Next slide, please. One interesting point is the group was created before 2005. But the momentum strengthened after the Paris Declaration because it was a political will of the international community to be more effective. So it strengthened the dynamic of this of this group. After that, we have another evolution because in the beginning it was just a working group of donors, and after that also we had national institutions involved in the water sector. Like all the countries, the water sector is very complicated. We have many departments involved in the water sector: Ministry of Interior, the Ministry of Environment, Ministry of Water, of course, Ministry of Finance. So in this group, we have always the participation of the Ministry of Finance and of course technical departments, utilities. This allows us to have a dialogue to share information and do coordination. I have to point out that this group is not a decision making. It doesn't substitute the decision procedures of each donors, but it allows to share information, to have a good dialogue between donors and with national institution. And it is very regular. It takes 2 or 3 times a year. Now we are at 45 meeting. The subjects are not only technical or financial. It is very diverse. Sometimes it is technical meeting, but sometimes it's financial. Sometimes it's on governance. The last 2 meetings of this working group was on the creation of regional multi-service companies, utilities at the regional level. It's very new. It will change the institutional situation of the water sector in Morocco. And the last meeting was about the impact of COVID on the water sector. So thank you very much, and I will be happy to answer any question.
Thank you, Hassan. Sorry, I was speeding you up at the end. So you have the contacts. I see some people are already putting questions on the chat. Please continue to do so while I introduce our panel. I will introduce both the panel members in one go. So we have with us Jules Kolker, who's the program manager of the Global Water Security and Sanitation Partnership, which is the World Bank's Water Practice Global Trust Fund to support analytical work and knowledge in the water sector. Previously, he coordinated the World Bank Water Practice Global efforts to secure additional financing to meet enormous finance gap in the sector that we've been talking about. He brings over 35 years of experience in dealing with a host of issues related to infrastructure, finance across multiple sectors, not only the water sector. He holds a master's degree in urban planning, public administration from the University of Pennsylvania in the US. Welcome, Jules, and thank you for waking up at 5 a.m. to be with us. And we have Daniel Norman, who works as a policy advisor for the GIZ sector program, Sustainable Water Policy. He is currently seconded to the German Development Bank, KfW, to support a feasibility study on the Urban Water Catalyst Funds, which is an innovative financing platform supporting utility turnarounds. Previously, he worked at GIZ Water Section and in the Water Reform Program of Kenya. Daniel also has a background as economist and political scientist. Welcome, Daniel. So I will kickstart, and that while we wait for the chat and the questions. So, gentlemen, we heard a lot of positive examples from Morocco and the Philippines. There's also several cases in the Handbook for Finance Ministers of SWA. So my first question to you in your global perspective is, we actually know what works and how to make it work. So why don't we see more replication happening in the water and sanitation? Jules, would you like to start? Putting you on the spot.
Sure. Can you hear me?
Yes.
Great. Okay. Thanks. Listen, let me touch on 3 quick things to answer your question. I think what the 2 case studies illustrate is the need for closer collaboration and coordination amongst all the partners. And the analytical work linked to the capital expenditures was actually quite critical in this. And we see this in our own work. We don't do analytical work just to create a report. The point of it is to try to utilize it in the investments that are being made in the sector, regardless of who's funding that. And we see this with our own efforts. We measure each year the impact of the knowledge we produce and the technical assistance we do in terms of our own lending operations. And for the last 2 years, that knowledge has been used in about $26 billion worth of lending. So technical assistance is a very powerful tool. But if you combine it with the capital expenditures that we're doing, it has a much bigger impact. I think the second thing, to your point, is if we can continue to focus on these foundational issues that Eileen and Hassan mentioned, making sure the service providers are technically and financially efficient, and making sure that the institutional and governance arrangements are clear, that focuses all of us on what's needed, we need to do with the technical assistance. And then finally, everybody has mentioned, and Angie pointed out, that we're really not on the way to meeting this goal. The pandemic has highlighted the issues around water, but we haven't really talked about the financial impact of the pandemic on the water sector. It's going to make attracting private resources to water more difficult, given the economic downturn. Yet there are ways to overcome this, and we've put together a couple models to measure the financial impact. We've given some guidance on how you could create a liquidity facility, but the point is that regardless of whether the money is public finance or private finance, we have to improve these foundational issues if we're going to be more creditworthy. And the collaboration linking the TA and the analytical work with the capital expenditure forces all of the parties, particularly the clients who need to lead this, given the leadership role, to really focus on those institutional challenges going ahead. Thank you.
Thank you, Joe, for those introductory points. Daniel, would you like to come in?
Yeah, thank you, Katrina. Maybe before I share thoughts why we don't see more of these cases being replicated, maybe let me share also a rather positive story, which also underlines what Joel was just saying, that financial cooperation and TA, if they're well combined, can have a much bigger impact. Is from Kenya, where I worked myself as part of the water sector reform. Almost 20 years ago, the water sector trust fund was created, and that trust fund had an urban financing window, which invested more than 25 million euro, but limited to grant money because it had an explicit pro mandate. And what was, I think, interesting about the trust fund was that the EU, BMGF, KfW provided the necessary financing. Also, government contributed to some extent. GIZ was on the other side responsible for the technical support. And what I learned from that case is that if you work in a institutional context and not so much on a project basis, and you have the technical support ranging over a long time span of, I think it was more than 12 years by now, you develop a lot of trust between the technical, financial actors and as well the client or the partner. And I think that is an example where we still try to learn ourselves on how to do it. But why don't we see more of that happening? We did recently a small survey actually with our GIZ field staff, and actually GIZ and KfW, talking just about the German cooperation, are active in 31 countries at the same time. I would not always say together, but they work there in parallel in the water sector. And but the GIZ colleagues told us that only in 1 out of 5 cases cooperation between these two German entities is considered as good. 40% stated it's more peaceful coexistence than really about realizing synergies and working well together. And what I found also very interesting was that 6 out of 10 stated that good personal relations are the most important factor that made it work, so that the decision makers, advisors, managers from all institutions, just the personalities and the level of trust, I would say they had to each other, that was the most important factor. And that's something yeah, which I found interesting because it's also something which is maybe difficult really to influence from the onset. So that's a little bit something I can contribute from the German cooperation perspective.
Thank you for that honest feedback as well. I mean, both Eileen, Hassan mentioned the important, and Jules, the important need for coordination, harmonization between also this financial and technical side. And here we're talking about agencies from the same development agency also not having that type. So only 1 in 5 cases of cooperation and coordination. And I'm just wondering if you in our experience, you're seeing maybe that's one of the downsides, is that we are all more shaped by our institutional rules and regulations, and there is less. What is happening that is leading to maybe less coordination, less harmonization? And when that's happening, I mean, also in my experience, I see it's very much personally driven. It's people like Hassan, who's committed for the sector for so long, that manages to bring who knows everyone and brings everyone together. How can we improve this among a lot of the bilateral agencies that are also listening? Do you have any advice for them, or anyone else in the panel from the speakers? Angie, Eileen, Hassan, you can raise your hand. Or
Katerina, it's Joel. I do think the clients are very focused on infrastructure investments. And if you can link the coordination and the technical assistance with a concrete result, I think generally we found this is a much more powerful tool than simply trying to do the analytical work. So it's not always the case, but the 2 case studies I think illustrate, and I know the Kenya example as well, we've been involved there as well, and a very relatively small amount of money there through an output-based aid program resulted in very significant investments from the private sector, like the local government experience in the Philippines. So right or wrong, a lot of the political leadership focuses on the capital expenditure. And if you can link it, the technical assistance and the collaboration to that, it's a very powerful tool. And we see that in other sectors. If you look at energy, that's certainly been the case. Thanks.
Thank you. I'm calling on to Catherine, who's monitoring the chat box. Would you have any questions that stand out for
I think we've 2 quite interesting ones. One was actually from Daniel to the Morocco case, asking why in this special case the Ministry of Finance has decided to get involved as much as it has, because we've seen larger investment programs in other countries where the Ministry of Finance hasn't shown that much interest. That's the one. And one on the Philippine case, John Butterworth asked how attractive, relatively speaking, the investment is for private banks compared maybe to other sectors. And if it's really the case that's attractive enough that is also now lending outside the mechanism and guarantees that were presented. That to kick us off.
Thank you. Hassan, shortly, and followed by Eileen.
Yes, quickly, the Ministry of Finance is very involved in all governmental programs, and it wasn't something difficult to have it with us in this dialogue, because all the programs have financial aspects. The second point maybe is that this government program and others have a domestic contribution of domestic public contribution in financing this program. So it was logical to have the Ministry of Finance, because he knows, the Ministry of Finance knows that the decisions or the initiatives which are taken have an impact on his funds, and so he wants to be involved from the beginning. And I think this is a good thing.
Eileen?
Okay. So in the case of the private banks, I'd like to emphasize that the first round of transactions without the guarantee are what we call the repeat clients. So this is the second time that the same private bank is lending to the same water district. That's one. But on other cases, what is important to note is that they are already being treated like a regular corporate client. So it is risk-based. So the private bank normally would charge a range of 1 to 3% margin, and then the guarantor would charge around 1%. So private bank would now use its 3% and also get the 1% from the guarantee premium. So it gets a spread of about 4 percentage points. So it becomes an attractive investment. And because it is risk-based and we have systems in place like credit rating systems, they got used to it. So it's very good investment for them. Thank you.
Thank you, Eileen. Catherine, any other questions for our panel or speakers?
We have two. I would just have two more questions, especially to the panel. There was a general question of Leonardo van Straten regarding, is there an estimation around how many percentage of cases worked in comparison to those that haven't? I mean, we have now focused on the positive examples, of course, but is there a feeling from the panel how many actually work? And the second question would be from Jonathan Wilcox. Under which conditions is blended finance a more efficient use of public and concessionary resources than a subsidy?
Joel, do you mind if I leave the questions to you? With all your experience.
That's fine. And the others can certainly weigh in. Look, on the second question, blended finance versus subsidy, blended finance is a subsidy. I mean, it's a partial subsidy that comes in to write down the costs. I think the tools need to be tailored to the local environment. That's very clear. And this relates to the first question about success and failures. I don't think we know what the percentage is, but I think we do know that what makes a successful effort, and Angie actually hit on it at the beginning, and it's really leadership, where we've seen the strong commitment that Hassan and Eileen mentioned. We've seen some very significant movements towards creditworthiness, and I really want to emphasize that word, because if the service providers aren't creditworthy, no matter what we do, Angie also mentioned the supply of money out there. We don't have a supply issue, or I should say until March, we didn't have a supply issue. There was plenty of money. And if you just look at the energy sector, you saw billions of dollars flowing into the energy sector in emerging markets because they got their foundational issues right. It took a long time, but they became more creditworthy. And we haven't achieved that yet. We haven't gotten there. And someone's just mentioned that COVID-19 is going to impact on that, and Katerina mentioned that earlier. That's absolutely true, but it doesn't undermine and it doesn't change the need to get the foundational issues right. We need more public money in addition to the private money. And the political leaders will look at the water sector and say, we're giving you money, and you're not spending it efficiently, and you're not using it widely, and you're undermining the governance issues. Not only are we not going to be able to attract private money in this environment, but it's going to make it more difficult to attract public money as well. We completed a subsidy study last year that looked at this. It looked at 10 countries. 80% of the benefits of that public money were being spent at the top 20% of the income scale. So we have to get our house in order, and that means the foundational issues. Then we can start getting to the successes and overcome the failures that we've talked about, regardless of whether we use it as blended finance or subsidies or PPPs or any number of things. There's plenty of instruments. They have to be tailored to the local environment. And we need that full breadth. I mean, the microfinance is another tool that's been used quite successfully in some environments. So I would focus on both case studies really highlight, and the manual that's coming out really highlights the need for more public coordination and dealing with these foundational issues. Thanks.
What about the other question? Thank you, Joel.
I thought I addressed both. You mean the one public blended versus subsidy?
No, the other one. So we know how many, we have a lot of financial experimentation also and innovation happening. How much is actually successful compared with the ones which are not successful? Do you have any?
Look, I can only talk from my own personal experience. I've been involved in probably more unsuccessful activities than successful. There's a variety of reasons, but to the best of my knowledge, no one's looked at it. The breadth of potential projects that have tried to do this is quite wide. Why were the PPP examples in Manila so successful and then one in Indonesia didn't work? I think there's a lot of PhD theses out there, but the reality is a lot of it had to do with political leadership and political will. We know the technical aspects to do this and do it right. We haven't always had the political leadership, and that's as much on ourselves as anybody else to get this right. So no, there isn't a specific breakout, but more importantly, I do think we know what makes the ingredients for successful work. And keep in mind that there's a wide breadth of activities that you can do looking at this private investment. There's not one size fits all, and there's not just one instrument. We talk about going all the way from equity investments down to microfinance. That's a wide breadth of instruments available.
Thank you. So and this is also, you will be able to see this in the handbook for finance. It's not the instruments. The instruments are used exactly. In some cases they're successful, in other cases they're not successful. I do have to close the session. I would like to thank all the speakers. The organizers asked me to come up with very short points. I tried to come up with 4 points of things that I heard over and over again in the session. Well, the first one is, so whodunit? How do we go about smooth financial and technical cooperation? So the first one, high level of leadership and commitment with a clear common vision. And this means between the national governments and all the agencies, both involved in the financial side, but also in the technical assistance to the sector. So that's number one. The second one that I keep hearing, coordination and harmonization platforms at country level with the right people to have the financial discussions. There was a comment that mentioned, yes, indeed, there's a lot of cooperation sometimes happening with large infrastructure, but less on the software or the governance side or the institutional side, and they need to be combined, as we saw in the cases of the Philippines and Morocco. Third, financial instruments, independently of what they are, but that they actually focus on improvements or outcomes of service providers, not only the technical side, but also the governance side of it. And four, I mean, you didn't mention it, but I think I keep coming back to that also in some of the case studies of the Handbook for Finance Ministers, actually the financial wizards that can navigate the complexities, the increasing complexities of the financial institutions and the development agencies. Without the commitment and the cooperation, of course, at high level, the skills of these financial wizards will not deliver the expected impact. So it's also interesting to see you, Daniel, between GIZ and KFW, being that bridge between two agencies. I think we need more of those bridges. So with this, thank you all for those that participated and engaged in this session. There are many more sessions today on finance and governance. I put the schedule. The presentations I saw already in the comments, you can find the slides under documents in the GIZ event app. And I wish you a very good week and a very good day discussing finance.